Hello, my dear students. Welcome you all. Welcome you for this amendment session. So, one second. Yes. So, hope my voice is audible and everything is good. So, we can start the session. So, this amendment session is for CA final May 22 exams. This is equally applicable for CS professional students also as well as CMA final students also. They can also attend this amendment session because these amendments are even applicable for their June 2022 exams. And so as you all know that whatever are the amendments that are applicable up to the date of 31st October 2021 will be applicable for your May 22 exam. So what I did is that I have compiled a material so that contains the amendments that are made from November 21 exam to May 22 exam. So what are the incremental updates? Suppose if you have already attended any November 21 classes, regular batch or fast track batch, or if you have any of my book, resource book or solved workbook or even revised book, etc., you can keep that and you can just add this incremental updates, whatever are there, amendments, and you can definitely prepare for your exam. Suppose if you have attended even before that, that is for May 21 exams, if you have attended the classes or prepared for May 21, and if you are writing for May 22, yes, you will be finding little difficult in coping up with this. So you need to refer to the amendments for November 21, which is already there in my YouTube channel, plus May 22 also. But I will not suggest that. So please go for a new book. Suppose if you have the books for May 21. Suppose if you have the books of November 21, it's okay, no issue. So you can just add this amendment material and you can prepare from that. Done. And sir, what about this amendments PDF? So where will I get, when will I get all these things? So simple, you just wait for some time. Already my person has shared that amendments material in the Google Drive. So you can download that Google Drive. You can click on that link and you will be able to see the PDF. So this PDF you can download and I'll be annotating a lot of notes, etc. and all with annotations also I will share. So without annotation, whatever I am going to take now, with annotation, so afterwards I will be sharing with you. Okay, and this amendment video will be there till the time you go for the exam, and even thereafter also, don't worry. So I will not be deleting this and all. And this amendment session, we are going to do it in a different manner, little bit. What is that I have given in this first? You can see this PDF where I have just given what are the various amendments that are applicable for your May 22 exam. Here, I just wanted to add one important point. That is, ICI has given an amendments material. But every faculty or every person is thinking that that is only the amendments. But that is not the fact. Whatever amendments that are given by ICI is after preparation of their study material for May 22 exam and November 22 exam. So there are many Finance Act 2021 amendments which are given in the book itself. So those amendments are also applicable. Okay, so please try to understand. Just don't follow the statutory update that is given in Board of Studies, because that contains only few amendments. So but in your study material, lot of Finance Act 2021 amendments were incorporated. So you need to learn all those things. All those things are also there. Okay, now if you see in Telegram, lot of people will be sharing the amendments material, and even other faculties will be making. So please follow, but think over whether it covers all the amendments. Okay, so that's why I just gave you this. What are all the amendments applicable for your May 22 exam as per your ICI study material plus statutory update, both covering both. That is this. So total we have around 46 amendments. Total we have around 46 amendments are there. So what you need to do is that, so you follow any amendments book or any amendments video which you're comfortable with. See, I will definitely not compel that you need to follow my class only. See, some of you might like the way I take class, some of you might not like the way I take class. It's all up to you. Okay, so I'm not forcing you, but I'm just informing you that, so these 46 amendments are there. So these 46 amendments along with the notification number, circular number, effective date, I have given in the first 2-3 pages. So these are the amendments that are applicable for your exam, taken from where? From the amendment, that is statutory update of ICI plus study material, updated study material. So whatever the old books that you have, if you keep this, so that will be sufficient. So in this around some 59 pages of information is there. In that, the first 3 pages is the index of the amendments, total 46 amendments, and along with the page numbers I have given there, so you can refer each and every amendment in the respective page number. Okay, now, so then what we are going to see now is the summary of all amendments from this moment onwards, in this video. So till the summary of these amendments, please keep in mind. So this is the summary of all the amendments. So quickly I will be brushing up. So what you need to do is that when you are going for the exam, that one day before the exam, if you want to revise quickly all the amendments, you can just watch this, the next 1 hour what we are going to discuss. Okay, then. So first we need to understand as to what is the meaning of supply that has been enhanced. So meaning of supply has been enhanced to include section 7(1)AA. So any activity or transaction by a person, so other than individual, so it can be HUF or it can be firm, AOP, BOI, company, body, corporate, association, or any person. Okay, providing services or any transaction. As the words used are transaction or services, which means that, or any activity, so it can be goods or services. It need not be only services, it can be goods or services. So any activity or transaction by a person other than individual, so to their members, same way vice versa. So members providing the services to the person is also covered, but it should be for a consideration. Of course, it is in the course or furtherance of business. Then it will become supply under section 7(1)AA. So this is a new one that is added. And because of this, previously, supply of goods by an unincorporated association or body to its members was treated as supply of goods as per section 7 subsection 1A. That got omitted. So why? Because first this activity is supply, and depending upon what are the transactions, so see the facts of the case and determine whether it is supply of goods or supply of service. That is this. Okay. Then next. The next area is about export of services. So there was one condition for export of services. So what is that export of services means? Export of services has 5 conditions. Supplier should be in India, recipient should be outside India, place of supply should be outside India, and consideration should be in convertible foreign exchange, and supplier and recipient are not two establishments of the same person. And in that, supplier and recipient are not two establishments of the same person. There is a clarification that is given. That is, for example, there is a company in India. That company started a branch outside India. So when the company in India is providing services to their branch outside India, will it be treated as export of service? Even if all conditions are satisfied, it will not be treated as export of service. Why it will not be treated as export of service? Because, the recipient should be a different person. So if supplier and recipient are two establishments of the same person, it will never be treated as export of service. So what is that they are clarifying? If that branch outside India is incorporated separately, then in that case, okay, in that case, that will be treated as a different person only. It will not be treated as, two establishments of the same person. It will be treated as a different person. So that is this clarification. Okay. Then next, so it should be incorporated under the law of outside India. Incorporated under the law of outside India. When we use the word incorporated for a separate legal entity, we use the word incorporated. So which means like how a Companies Act, if there is any other law in that country, so gives the kind of legal validity or legal recognition, so then it will be called as incorporated outside India. Then even though it is our branch, if we provide any services to that, if all other conditions are satisfied, it will become export of service. Then next one, that in e-invoicing and dynamic QR code, so e-invoicing is required in case of B2B supplies where aggregate turnover during any of the preceding financial years exceeds 50 crores, and that limit has been reduced to 20 crores, but that is not applicable for your May 22 exam. That is for November 22 exam only. So for your May 22 or June 22 exam, it will be 50 crores. Aggregate turnover during the previous year does not exceed 50 crores during any previous year. During the current year, for B2B supplies, you need to give e-invoice. And what is electronic invoice? Obtaining three things from the invoice registration portal, that is invoice reference number, QR code, and digital signature. It is known as e-invoice. And dynamic QR code is required in case of B2C supplies. What is B2C supplies? So recipient is unregistered. So in that case, dynamic QR code is required. When dynamic QR code is required, if aggregate turnover during any of the preceding financial years exceeds 500 crores, then current year for B2C we need to give dynamic QR code. But this e-invoice and dynamic QR code is not required in few cases. So in that they have added government or local authorities. Government department or local authority is not covered apart from the others. So that's what I have given. So easily you can remember. Remember biggest. So biggest not required to file e-invoice. Okay. So what is that biggest? B for banking company, I for insurance company, G for goods transport agency, another BIGG. So another G is for government, department or local authority. E for exhibition of film in a multiplex theatre. And S for SCZ unit but not SCZ developer. And T for transportation of passengers by any mode. Same way, QR code, dynamic QR code also same, but only thing that SCZ unit is replaced with OIDR supplier located outside India, making supplier to a non-taxable online recipient in India. Rest of the points are same. Whatever we have seen for e-invoicing, that will be applicable for this dynamic QR code also. So there you can remember big toe, BIGGTOE. So big toe. So then they are not required. So in the biggest, so that yes is gone. In that place, O is there. Okay. That is OIDR supplier located outside India, making supply to a non-taxable online recipient in India. So what is the amendment in this place? That government department, any government department, central government department or state government department is not required to, give any invoice, even local authority. Same way dynamic QR code also, even though their aggregate turnover exceeds the prescribed limit. Then the next amendment that we have is, in dynamic QR code, they gave a clarification. What are the details that needs to be entered to generate a dynamic QR code and the exceptions related to that. So that's what I have just given in a simplified format. Details required in dynamic QR code. Supplier GSTRs is required. Then UPI ID of the supplier is required. And bank account and IFSC of the supplier is required. Okay. So supplier GSTIN is static. So not a dynamic. So it will be same for all QR codes. UPI ID of the supplier is also static. Bank account of the supplier is also static. So that will not be varying at all. Then invoice number and date. So invoice number and date will be dynamic. So it changes with respect to every transaction. Then amount along with the breakup of tax. So that also changes with respect to every transaction. So taking all these fields, we need to generate a dynamic QR code. And so these fields, so dynamic QR code, there are a lot of payment gateway providers. There are a lot of banks and financial institutions which will be providing us a thin application. So in that application, you can enter these details. Click on generate QR code. That QR code will come. So you put it on the invoice. Okay. Now, suppose that the payment is collected before the generation of invoice. So generation of invoice before itself the payment is collected, then dynamic QR code is not required. First of all, dynamic QR code is in which case? In case of B2C supplies, when the aggregate turnover during any of the preceding financial year exceed 500 crores. So therefore, if the payment is received before generating the invoice, so then in that case, so you don't have to give dynamic QR code. Understood or not? So dynamic QR code not required if the payment is received. However, whatever payment that is received before generating the invoice, the payment reference should have been mentioned in the invoice. If the payment is collected by credit card, debit card, or any NEFT transfer, RTGS transfer, or Google Pay, any UPI, so every transaction will have a transaction reference number. So you enter the transaction reference number in the invoice. Suppose if you are receiving it by cash, so then the date on which the cash is received, so that also should be entered. When the payment is received before the date of invoice. If the payment is received after the date of invoice, they are telling that the payment should be received only by scanning the QR code. Only by scanning dynamic QR code, nothing else. Okay. Now, for this UPI ID, there is a relaxation that is given. Supplier UPI ID not required if the payment is collected by any other person. For example, Amazon you take. So Amazon, so whenever they are delivering the product on behalf of a supplier, so the money will be collected by Amazon, pay on delivery option. So in that case, if that supplier, that is for example, there is one company, so that company's turnover exceeds 500 crores during the previous year, and that company is supplying goods through e-commerce operator. So in that case, the invoice should be a dynamic containing a dynamic QR code. But in that dynamic QR code, while mentioning the UPI ID, so whose UPI ID should be mentioned? Amazon's UPI ID should be mentioned. So the payment should be collected only by scanning the QR code. Okay, so that is this exception. Payment collected by ECO or any other person, UPI of such ECO or any other person should be mentioned. So bank account and IFSC of the supplier. So what is that exception? Not required if UPI ID is linked with bank account. Okay. Solved workbook as well as that's it book, every book of mine for May 22 exam contains these amendments. So these amendments are already there in that's it book. These amendments are already there in solved workbook. These amendments are already there in revised book. These amendments are already there in solved workbook. For May 22, whatever books that I have released, in all those books, these amendments are there. Don't worry about that. So this is mainly for the students who already attended the previous classes and they have purchased the previous books. I don't want them to buy the new book. Okay, see, for that reason only, whatever are the extra points that are there from that previous book to this book I have given. So nothing else. Okay, so all these are already incorporated in your book. Don't worry. Then next thing. So first I am going to revise the entire thing as a summary form, and thereafter I am going to discuss every point in detail. So I will tell you the purpose of this. So this is like a trailer. Okay, and thereafter the main picture I am going to discuss. This is the summary. So I am revising it in a quick format so that next time when you watch this video, you will be able to see just this part alone. So for that reason only I am going little bit fast, so don't mind, because every point again I am going to explain in detail. I am just giving you a picture of what are the various amendments, and thereafter I will discuss everything, each and every point in detail. So don't worry, just the 4 pages I completed all the amendments. That is this. So then bank account and IFSC of the supplier. So not required if UPI ID is linked with the bank account, and invoice number. What is that? UPI ID linked with the bank account, which means there are some UPI IDs which are linked to the bank account and not linked to the bank account. If the UPI ID is linked to the bank account, so then in that case, so no need to enter the bank account because UPI ID itself will be sufficient. And then invoice number and date. Invoice number and date, there is an exception. Suppose if it is a retail sales, not practically possible to enter the invoice number, so a unique number can be entered, a unique reference number can be attached. So for example, today, every day is a unique day. So for example, 5th March 5/3/2022 is unique, it will never repeat. In that day, 001 is the invoice number 1. So like that also you can create a reference number, so in that invoice number place. Then next, invoice amount with breakup of the value and tax. In this regard, I told you one point. That is, if payment is received before the date of invoice, no need to generate a dynamic QR code. What if part payment is received before and remaining payment is received after? So now in that case, the QR code should contain the value and tax only with respect to the remaining amount, not with respect to the balance like the whole entire amount. Only with respect to the remaining amount, it should be mentioned. So that is with respect to invoice amount with breakup of value and tax. So exception, part payment received before and part payment received after. So invoice should contain only the details related to that part payment which is not yet received, and the dynamic QR code also should contain the value and tax with respect to that part which is not received before the date of invoice. And then the next one, physical copy of the invoice is not required. Physical copy of the invoice is not required. So whenever the invoice is generated in electronic mode, so generally physical copy needs to be transported. So in triplicate, original, duplicate and triplicate. Original is for buyer, duplicate is for transporter, triplicate is for the supplier. So this original, duplicate, triplicate not required if e-invoice is generated. So therefore that e-invoice, if it is made available for scanning the QR code, that will be sufficient for verification. So no need to take the physical copy of the invoice. That is one circular we have. Then in place of supply, there are some exceptions to section 13. Section 13 determines the place of supply in case when supplier or recipient is in India and the other person outside India. So performance-based service in relation to goods. So we have location where services are actually performed. But we have 4 exceptions now in that. 3 exceptions were already there for previous exam itself. Now the 4th exception is related to maintenance, repairs and service with respect to ships, vessels or any parts. If it is used in the course or furtherance of business, if the ships etc. is used in the course or furtherance of business, so for that if there is any maintenance, repair or servicing etc. related to that, will be coming under location of recipient taken as a place of supply, but not location where services are actually performed. So location of recipient should be taken. And this exception, we have already 3 exceptions. Number 1, if goods are temporarily imported for carrying out repairs and exported after repairs, then it is not location where services are actually performed. It is the location of recipient. And same way repairs or any other process. Then second exception is that if a drug manufacturer or a pharmaceutical industry or a laboratory is importing the drugs and carrying out the test on the drugs and thereafter they send a report, in that case also not location where service actually performed, location of recipient. All these are performance-based service in relation to goods. Third, maintenance, repair and overhauling of aircrafts. The aircraft or aircraft parts provided that aircraft is used in the course or furtherance of business. These 3 exceptions were there to that aircraft and aircraft parts. They added vessels and vessels parts. That's it. Okay. Then next intermediary. So this intermediary is also given in place of supply. So in place of supply for banking and other financial services and intermediary services, for the purpose of section 13, the location of supplier will be taken as the place of supply. Okay. So in that part, here who is called as an intermediary? When I outsource the work to one person, whether that person to whom I have outsourced the work, will he be treated as intermediary? No. So whenever we outsource the work, the job worker or the person to whom we outsource the work, so that person will not be called as intermediary. So there is a main transaction between the supplier and recipient. So there is an intermediary who facilitates, who arranges or facilitates the transaction. So he will be only called as intermediary. So for example, I enter into contract with you to provide the services. I outsource it to some other person. So that person is not called as intermediary services. That will be normal only. Now I entered into contract with you to provide the service. These are mediated through one person. So that person arranges or facilitates the transaction in securities or transaction in goods or transaction of services. So that person is only called as intermediary. Okay. That is this. Next. So time limit for availment of ITC in case of debit note delinked with date of invoice. So previously date of invoice should be seen for the purpose of determining the time limit to avail ITC on debit note. So but now no need to see the date of invoice, see the date of debit note itself. So if debit note comes in a particular financial year, so for that debit note, by 20th October of the succeeding financial year or date of filing annual return, whichever is earlier, is the time limit by which ITC needs to be availed. Okay. Then next time limit for filing form GST ITC 4. What is this ITC 4? Form GST ITC 4 is a statement. So that needs to be given by a person who is sending the goods on job work and who is receiving the goods from the job work. So this statement is previously a quarterly statement, but now they have amended it to half yearly and annual statement. Suppose if aggregate turnover during the preceding financial year, previous year, exceeds 5 crores, then this ITC 4 goods sent on job work, received from job work, needs to be submitted on a half yearly basis. Suppose if the aggregate turnover during the previous year exceeds 5, does not exceed 5, then it will be annual. Okay, what is the time limit? By 25th of the month following the half year in the first case. So for example, first half year April to September by 25th of October, second half year from October to March by 25th of March. Suppose if the aggregate turnover during previous year does not exceed 5 crores by 25th of April, so only once, yearly once, this ITC 4 needs to be filed. Then there are various circulars on the exemption that is given. So exemption of GST, again I am repeating, this is a quick summary and every point in detail I will be discussing. Okay, so exemption of GST is provided to service supplied to an education institution including Anganwadi. There are some Anganwadi schools. These Anganwadi schools, so basically will be providing nursery and all, nursery coaching and nursery training, daycare kind of. So these Anganwadi schools will be, providing education up to 12th standard, covered under education institution. So they are under primary. So primary or nursery. So that is also part of category 1 up to 12th standard. Now, to such an Anganwadi school, I am providing catering service. So I am providing some protein rich foods, porridge and egg, etc. So boiled eggs, etc. So this will be covered under catering service provided to category 1 education institution and is exempted. Yes. So Anganwadi schools will also be coming under that category 1. So let the catering be funded by government or funded by any other person. So that is irrelevant. So services provided to these Anganwadi schools by way of catering or supplying food will be exempted. That is this point. Then next, there are some examination boards. These examination boards' sole objective is to conduct the exam, nothing else. For example, IIT, JEE you take, or then NEET exams you take, like that some competitive exams. So these civil services, like that, there are some boards, even CAT, Common Aptitude Test. So there are some boards which will not offer qualification, but they will be conducting only the examinations. So now, these people will be collecting entrance exam fee. Is that exempted? We have an exemption which says that entrance exam fee collected by an education institution is exempted. So in this case, whether these education institutions will be treated as that, these exam departments or examination boards will be treated as education institution, so that the entrance fee is exempted. Yes, that entrance fee is exempted. Even if it is only an examination body, so that examination body should be treated as an education institution for the limited purpose of conducting the exams. So therefore, services provided by them is exempted by way of collecting entrance exam fee. Then next, so in case of annuities paid for road construction, so government is awarding me a contract. Under the contract, I need to construct the road and I will be recovering the consideration from the government in annuities. Now, in this case, will it be treated as toll charges? No. Toll charges is a different concept. Government gives me a contract to construct the road and I will install a toll gate, and on the vehicles which are plying on that road, I will be collecting the toll charges. That toll charges is exempted. But this is what? Services provided to the government for which the money is received in installments. So definitely it will be covered under GST. This is not exempted. So this is that circular. Then another circular which is related to, so composite supply by way of milling of wheat into wheat flour. So that is, listen carefully. So whenever government is required to do certain activities as per Article 243G or Article 243W of the Constitution, to whom they need to provide the service, they need to provide services to the general public under Article 243G or 243W. In that, public distribution system of essential commodities is also one of the activity. Now, they need to distribute wheat flour. So for the purpose of distributing the wheat flour in ration shops, so they will be asking a person to procure the wheat, convert it into wheat flour and submit it to the government. So the government will do the distribution under PDS, public distribution system or ration shops. So now I am that person. I procure the wheat, convert it into wheat flour and I am giving it to the government. So now any outsourced services will be exempted. That is, if government is required to do something and if they outsource it to me, that is exempted. In that case, so then this activity is also exempted. No, because in this, the value of goods exceeds 25%. There is one point. What if it is pure service? Exempted. What if it is both goods and services? If it is both goods and services, we need to check whether the value of goods exceeds 25%. Yes, then it will be taxable. It is not exempted. So in this supply of wheat flour, so yes, I am doing the process of converting wheat into wheat flour. But what is happening here? What is happening here is that there is a goods element also. The value of that goods element exceeds 25%. So therefore, the exemption is not available in this case. That is this point. Okay. Then new exemptions added or modification of the existing exemptions. That is previously any training program provided to government for which entire expenditure is borne by the government was exempted. But now any training program for which greater than or equals to 75% of the expenditure is borne by the government, then the training program is exempted. So from entire expenditure, they brought down to greater than or equals to 75%. Then number 2, services provided by institutions or NGOs under central scheme of scholarship for students with disabilities. There is a central scheme of scholarship for students with disabilities. For that, any training program is provided by any person for which entire expenditure is borne by the government, then only it is exempted. So now previously any training program entire expenditure borne by government exempted. Now they have divided that into 2 points. Number 1, that is if it is to other than persons with disabilities, then 75% or more borne by the government exempted. Person with disabilities, entire amount borne by the government is exempted. Like the 2 points we have. Then FIFA Women's World Cup 2020 entry ticket was exempted irrespective of the ticket price. And this FIFA Women's World Cup 2020 was not held in India in 2020 because of the COVID first wave. And thereafter it is rescheduled in 2022. So that entry ticket is exempted whenever rescheduled. And then same way, AFC Women's Asia Cup 2022 is going to be held in India. So for that also the entry ticket will be exempted. Okay. Then fee for granting national permit. Generally, when vehicles are going from one place to another place, so they will be taking a national permit. So that is one state to another state when they are crossing. Or so multiple states if they are going, they are into transportation business, they will take a national permit or permit for crossing one state to another state. So that permit charges collected is exempted. Okay. Then next one, transportation of goods by vessel. Transportation of goods by vessel from India to outside India is exempted. Okay. So that exemption is now extended up to 39/2022. It was up to 39/2021. They extended it for one more year, that is 39/2022. Same way, transportation of goods by airways also, vessel also, both. Transportation of goods by airways as well as vessel from India to outside India was exempted up to 39/2021. Now they extended it for one more year, 39/2022. Okay. Then next point is that services by way of accessing road or toll charges. So that includes overloading charges at the toll plaza. So generally in the toll plazas, if there is any overloading of the vehicle, so they will be collecting overloading charges. Even that overloading charges is also part and parcel of toll charges. So that is also exempted. Toll charges anyhow exempted. So what is special here is about that overloading charges. So that overloading charges collected by toll gates is also exempted. Then next one, relaxation from Other Authentication. Other authentication is not required for certain people who are undergoing registration. If you are an individual, you are required to undergo authentication, but if you are not a citizen of India, authentication not required. Same way, if you are a partnership firm, the partner is required to undergo authentication, but not all partners. Okay, so partners other than authorized or managing partner not required. Then you take HUF. Karta is only required to undergo authentication, not all members of HUF. Then you take any company, body corporate or any other entity, authorized signatory is only required to undergo authentication, but other people in the body corporate or company not required to undergo authentication. Okay, these are the 4 points you need to remember. And thereafter, government is not required to undergo authentication. So central government or state government department, local authority, public sector undertaking and statutory body under the Act of Parliament or state legislature, they are also not required. 4 people. First 4, individual other than, that is individual who is not a citizen of India. Then partnership firm other than authorized or managing partner. HUF other than Karta. Body corporate other than authorized signatory. 4 points. Then 4 points, government related points, central government or state government department, local authority, public sector undertaking or statutory body. Then last, UIN holder. So these people are not required to undergo authentication when they are going for registration. And same way, every registered person before the date of authentication, before the date of enactment of this authentication, other authentication, is also required to undergo authentication at a later point of time. They are already registered. So now, whether these people who are already registered should undergo authentication? No. So they have given a clarification stating that if a person is not required to undergo authentication at the time of registration, even if they have already registered also, the same point is applicable. They are not required to undergo authentication. That is this point. Then next we have interest on net liability. Whether interest will be computed on gross liability or on net liability was a confusion from the beginning for delay in filing GSTR 3B. For example, GSTR 3B due date is 20th of July and I filed it on 28th of July. So there is a delay by 8 days. So for these 8 days, whether I need to pay interest? Yes, I need to pay interest because whenever there is a delay in filing 3B, there is a delay in payment of tax. Because along with TP only we will pay tax, and 8 days, so there is a delay. For that 8 days we need to compute interest at the rate of 18% per annum on what? On the total liability as reported in 3B or only on the net liability? It is only on the net liability. What is the meaning of net liability? So that amount which is paid to electronic cash ledger, okay, that amount which is paid to electronic cash ledger, that is only taken as the net liability. It includes gross liability under FCM minus input tax credit, net liability under FCM plus GST payable under RCM. So that is known as payable through cash ledger. So on that amount only we need to compute interest. So therefore it is on net liability. This is a retrospective amendment with effect from 1/7/2017. While Finance Act 2021, they made it applicable retrospectively from 1/7/2017. Okay, that is this. And then annual return is now required to be filed by every registered person by 31st December of the succeeding financial year. So in this annual return we need to understand that is from financial year 2021-22 onwards what is the position. So that is GSTR 9 is mandatory irrespective of the aggregate turnover, that's an annual return. Whereas GSTR 9B is to be filed by an e-commerce operator, so that is also mandatory. GSTR 9C, previously GSTR 9C was the audited, but now it is self-certified. Okay, even from 2021 itself, for the 2021 financial year itself, it is self-certified only. But whens are required? Not when aggregate turnover exceeds 2 crores. Aggregate turnover exceeds 5 crores. Now the limit has been enhanced to 5 crores. So not 2 crores. Okay. So therefore, for that purpose only I just gave you this point. So aggregate turnover exceeds 5 crores, not 2 crores. Previously it was 2 crores. The limit has been enhanced and it is now a self-certified statement. GSTR 9A was an annual return to be filed by a person opting for composition scheme. But in the place of 9A, we have GSTR 4. And that 4 is mandatory irrespective of the aggregate turnover. Then revision in late fee for delay in filing returns. So there is a late fee. So completely they have revised. So the general late fee is what? The general late fee will be other than annual return 100 rupees per day subject to maximum point that is 5,000 rupees under CGST Act. The same is under SGST Act. This is for other than annual return. For annual return, 100 rupees per day, subject to maximum 0.25% of the turnover. This is under CGST Act. The same is payable under SGST Act. This is the basic late fee that is given in section 47. Now, many notifications were issued in order to reduce this late fee, and these notifications are permanent notifications. It's not temporarily for the sake of COVID, etc. and all. Permanently, they have reduced. What is that reduced? Okay. So difference between GSTR 9 and 9C is that 9 is required to be filed by every person and 9C reconciliation statement only by a person whose aggregate turnover during the previous year exceeds 5 crores. That is the reconciliation statement. So containing the reconciliation of ITC avail, turnover, etc. Then revision of late fee. So late fee Now, please try to understand, very important, definitely you will be getting for MCQ. Suppose if it is GSTR1 or GSTR3 filed late. So now we need to see, is it nil return or other than nil return? If it is nil return, 10 rupees per day subject to maximum 250 rupees under each act. Suppose if it is other than nil return, so 10 rupees per day subject to maximum 250 rupees only. For example, if there is a 10-day delay, so 10 into 10, 100 or 250, whichever is lower. So 100 only will be taken. Suppose if there is a delay for 30 days, 30 into 10, 300, 300 or 250, whichever is lower. So that will be 250 rupees will be taken. If it is other than nil return, we need to see aggregate turnover during the previous year does not exceed 1.5 crores, exceed 1.5 crore, does not exceed 5 crore, exceed 5 crore. In all these three cases, per day it will be same, 25 rupees per day, but the maximum amount will change. The maximum amount will be 1000, 2500, 5000. So aggregate turnover during the previous year does not exceed 1.5 crores, 25 rupees per day, subject to maximum of 1000 rupees. And this is under each act, of course. And then, suppose if the aggregate turnover during the previous year exceed 1.5 crores but does not exceed 5 crores, same 25 rupees per day but subject to maximum of 2500. If the aggregate turnover during the previous year exceeds 5 crores, again same 25 rupees per day but subject to maximum 5000, the original maximum amount. Okay, so this you need to remember at any cost, and this is applicable for the month with effect from the month or quarter ending June 2021 onwards. Okay, then GSTR 5, GSTR 5A and GSTR 6. GSTR 5 is a return to be filed by a non-resident taxable person, and that return is to be filed by 20th of the month following every month or 7 days from expiry of registration, whichever is earlier. Whereas GSTR 5A is a return to be filed by a OIDR supplier located outside India by 20th of the month following every month. GSTR 6 is a return to be filed by input service distributor. Okay, suppose if it is nil return, same 10 rupees per day subject to maximum of 5000. There is a difference. Generally nil return means 10 rupees per day subject to maximum 250, but here it is 10 rupees per day subject to a maximum of 5000. They did not change the maximum, 5000 only. And other than nil return, 25 rupees per day subject to maximum of 5000. They didn't change that maximum, so the maximum is same. And GSTR 7, so GSTR 7, 20 rupees per day subject to maximum. In amendments material they have given it as 100, but actually in the notification it is given as 1000. So I say amendments material is wrong, it is not 100, it will be 1000. So please be careful with respect to this. So this is 1000 only, you can refer to the notification, relevant notification. Then GSTR 8, for GSTR 8 they did not reduce any late fee. So GSTR 8, the original late fee, that is 100 rupees per day subject to a maximum of 5000 rupees. Then GSTR 4, what is GSTR 4? Annual return to be filed by a person opting for composition scheme, and that is nil return 10 rupees per day subject to maximum 250, same. And other than nil return 25 rupees per day subject to maximum 1000. Easily you can remember this. That is, if you see, every person who is under composition scheme, their aggregate turnover should not exceed 1.5 crores, correct? For aggregate turnover not exceeding 1.5 crores, GSTR1, GSTR3B, what is the late fee? That is 25 rupees per day subject to maximum 1000. Here also see, that is other than nil return, 25 rupees per day subject to maximum 1000. If it is nil return, same way, so that is 10 rupees per day subject to maximum 250, same way 10 rupees per day subject to maximum 250. Then GSTR 9 or 9C, that is annual return including or not reconciliation statement. So for that, if there is any delay in filing, so then the late fee will be original, they did not reduce. That is 100 rupees per day subject to maximum 0.25% of the turnover. So these are the late fee under CGST Act. The same amount of late fee will be payable under SGST Act also, but not under IGST Act. Under IGST Act, we don't have to pay any late fee. Then GST audit now stands omitted. So GST audit is now not applicable. So we have to go for self-certified statement only with respect to 9C. Previously 9C was audited by a chartered accountant or a practicing cost accountant. So now it is omitted. So only a self-declared statement. Okay. Then next, revision in computation of time limit for refund application. So whenever you are going for refund application, so refund application should be made within 2 years from the 11th day. And if the refund application not made within 2 years from the relevant date, then the refund cannot be claimed. That's how the law is made. So now in that case, while computing the 2 years, exclude the period for which they gave a deficiency memo and you file the rectified application. For example, so within 2 years from the relevant date, you filed a refund application and then they gave a deficiency memo or a notice stating that so this particular application is not correct, so there are some deficiencies. So now rectifying the deficiencies, again you file a refund application. So now in this case, the second time you are filing refund application, that is more than 2 years, will it be valid? Yes, it will be valid, because the period between the date of issuance of deficiency memo till the time we file the revised application, so that should be taken off in computing the 2 years. So that period of relaxation is there. Okay. Then withdrawal of GST refund application. So refund application can be withdrawn anytime before issuance of order. Okay, previously this facility was not there. Withdrawal of refund application. So once we file a refund application, if it has some error, and suppose if they pass that, then for that period again we cannot go for the refund application. This difficulty was there. So by mistake I took the ITC less. So then I went for refund of unutilized ITC. When I went for refund of unutilized ITC, they granted the refund also. But the problem is that ITC should have been more, because I have mentioned less. Can for the same month I file again refund of unutilized ITC? Not possible. Okay, next month can I take that? No, because in refund of unutilized formula, we will take the ITC available for that month only into zero rated turnover by adjusted total turnover. So opening balance and all we will not take. So then to avoid this difficulty, so what the lawmaker did is that you can withdraw the refund application and again file a fresh application, but ensure that the withdrawal is before issuance of provisional order or final refund order or payment order or refund withhold order or any notice. Okay, so before giving any refund order, either provisional or final, or before passing payment order, or before passing refund withhold order, or before any notice, you should have withdrawn the application. Then refund of unutilized ATC for export on payment of duty. Which duty? Customs duty. So we have one point. Whenever you export and on that you pay customs duty, you will not be able to get the refund of unutilized ATC. Like that one point is there. Whenever you export and upon export, you will not be getting refund of unutilized ATC if customs duty is payable on that export. Whether nil rated or exempted goods are also treated as goods on which customs duty payable. No. So under customs, so nil rated goods or exempted goods will not be treated as duty paid goods, for which refund of unutilized ATC not available is a wrong notion. So that's why they gave a clarification stating that you are exporting goods and that goods are subject to export duty, but now it is made nil rate or exempted. It's okay. You can go for refund of unutilized ATC. You are exporting. You are paying customs duty on that goods. Refund of unutilized ATC option not available. Then you need to go for refund upon payment of IGST. So that is this. Then refund on account of wrong classification. So that is treating intrastate as interstate. Section 77. So related to that, there was no clarity as to when the refund application should be made, etc. So now they brought some clarity under Rule 89 Sub Rule 1A of CGST rules. That is treating intrastate. I have made interstate supply, made payment as interstate, but actually it is intrastate. So I should have paid CGST, SGST. I paid IGST. Now I need to again pay CGST, SGST and get the refund of IGST. Remember, first pay the correct tax and then get the wrong tax as refund. Okay. So same is the case reverse. So first I have to pay IGST and then I need to get the refund of CGST, SGST. Okay. So therefore wrong classification, refund of wrong tax paid upon payment of correct tax. Correct? And what is the time limit for making refund application? Refund application is in RFD 1. So friends, is my audio properly audible? Because one student is asking. So I believe that the audio is proper. So refund application is in RFD 1. What is the time limit for refund application? Within 2 years from the date of payment of correct tax, that should be taken. Okay. So what is that? Within 2 years from not the date of payment of wrong tax. First we would have paid wrong tax. Again, we will pay correct tax. So the day when we pay the correct tax, from that date within 2 years, we need to make application for refund. That is this. So now, whenever we made intrastate supply and subsequently held to be interstate, whenever we made interstate but subsequently held to be intrastate, like that. The wording is used in the law. What is the meaning of that subsequently held? Subsequently held means either identified by the taxpayer or by the tax officer. Okay. So either identified by the taxpayer. So taxpayer himself came to know that place of supply is wrongly taken, and that's why intra has become inter, or it can be given by the tax officer. Okay. Then next, wrong refund of wrong tax paid not available if the taxpayer has made the tax adjustment in the invoice by way of giving credit note. So in credit note itself the tax adjustment is done. So then in that case the refund situation will not arise because the amendment has been done. Then withholding of GST refund. So if there is any outstanding demand against a person, so whatever refund that the person is about to get, so that will be withheld. Okay. So if the proper officer or commissioner is satisfied that the person is no longer liable to be withheld, then he will pass an order for release of that withhold refund. Okay. And so first proper officer is required to pass an order for release of withheld refund and then pass the refund sanction order. So first refund has been withheld if there is any outstanding duty, outstanding tax against that person. So now proper officer first should release the withhold order. So pass a release of withhold order and then sanction the refund. That is this adjustment to be done. Then a small amendment in that. Then blocking of eway bill. So we know that if you are not filing returns for consecutive 2 months or 2 tax periods or 2 quarters by a composition scheme dealer, so then against that person, so eway bill cannot be generated either as consignor, consignee, transporter, etc. Now there is a relaxation that is given. So against that person cannot generate eway bill, but his transporter can generate eway bill, his recipient can generate eway bill. Okay. So that is in the sense like, so for his outward supplies only eway bill cannot be generated, but for his inward supplies, whatever is there, so for that the supplier can generate eway bill, even the transporter also can generate the eway bill. Eway bill cannot be generated if return is not filed. Eway bill generation facility is blocked only with respect to outward movement of goods by a registered person who has not filed the returns as above. However, eway bill can be generated in respect of inward supplies of the said registered person. Okay. Then next, customs and FTP. So in customs and FTP, so amendments were not given in the amendments material, but lot of amendments were there in the study material. So see that is amendments related to anti-subsidy duty and anti-dumping duty. So we have anti-subsidy duty and anti-dumping duty. Anti-subsidy duty is levied whenever the imported article enjoys the export subsidy. Anti-dumping duty is levied whenever the product is being imported into India at a price less than its selling price in the market. Which market? That international market. Okay. So now this anti-dumping duty and anti-subsidy duty. So previously there was a confusion whether both for 100% EOE as well as SEZ, so that was relaxed. So that confusion is now omitted by Finance Act 2021. So what they are telling is that, so even though it is imported by 100% EOU or a SEZ, let it be anti-dumping duty or safeguard duty. This provision was there for safeguard duty long back, and even anti-dumping duty, all three, anti-subsidy, safeguard and anti-dumping duty, all these three cases. So if the goods are imported by 100% EOU or a SEZ, they are not required to pay those duties, additional duties, safeguard duty, anti-dumping duty, anti-subsidy duty. However, if the goods are imported by a SEZ or a EOU, then clear to DTA, then they need to pay that duty, whatever they got exempted before, so that they need to pay now along with interest. Okay. Then next, so this anti-dumping duty and anti-subsidy duty, once levied, will be valid for a period of 5 years, and thereafter for every 5 years it can be extended, and there is no time limit, unlimited time. But the review should happen every 5 years. And there was one case law which says that if they did not complete the review within 5 years and release a notification of extinction immediately on expiry of 5 years, the duty will not have effect. Like that, one case law is there. So now, to nullify that case law, they made an amendment in Finance Act 2021. What does it say? Suppose, if the review has been initiated before 5 years, before expiry of 5 years, the review has been initiated, but could not be completed within 5 years. Okay, review is initiated before 5 years there, but it could not be completed within 5 years. Then automatic extension for 1 year. If the review is not at all initiated before expiry of 5 years, that automatic extension of 1 year will not be there. Okay, that is this point. Then circumvention of anti-subsidy duty and anti-dumping duty. What is this circumvention? Circumvention means you are escaping from the payment of anti-dumping duty and anti-subsidy duty. So what you are doing is that you are changing the description of the goods. You are changing the description of the goods. So one product attracts anti-dumping duty, you are changing the description of that. Or you are importing a product attracts anti-subsidy duty, you are importing it in unassembled or disassembled form. Or you are importing duty, like you are importing goods from a particular country for which anti-dumping duty or anti-subsidy duty is applicable. Now you change the country of origin. You change the country of origin, or in any other manner you try to escape from anti-subsidy duty or anti-dumping duty. Then government may by notification extend the anti-dumping duty for these articles also for which you try to escape. So they have given only for the product. But if you are trying to escape from anti-dumping duty against that product and imported in unassembled form, even for that unassembled form also they can make it applicable. And suppose if you are importing from Germany and for that it attracts anti-subsidy duty, then they can expand, you try to change it from Japan, you are importing, then for Japan also they can levy anti-subsidy duty. So that is the power that is given to the central government here. That is circumvention of anti-dumping duty or anti-subsidy duty. Then absorption of anti-dumping duty or anti-subsidy duty. What is this absorption? Absorption means, so whenever a subsidy is given by the foreign country, so Indian government has increased the value of the imported material by adding anti-subsidy duty. Now again, the foreign country has given a further subsidy. Now in that case, again can we increase? Yes, we can increase. Not that once notification issued is final, again we can increase that. So whenever the foreign country gives a subsidy to absorb this anti-subsidy duty, then again same way, a product which is imported into India attracts anti-dumping duty. To absorb that anti-dumping duty, the foreign seller is reducing the price, export price to India. So now in that case, even though it is notified, again they can amend the notification and they can enhance the anti-dumping duty if there are evidences of absorption of that anti-dumping duty. That is this. Okay. Then next we have electronic cash ledger and electronic duty credit ledger. Electronic duty credit ledger and cash ledger concept got created in customs. It was there already in GST, and in that electronic cash ledger was already there, and electronic credit ledger regulations have been developed. So under that regulations, so every person, that is importer or exporter, will be given an electronic duty credit ledger. So in that electronic duty credit ledger, okay, in that electronic duty credit ledger, if there is any duty drawback or refund or incentives that are required to be given to a person, so that will be put into the electronic duty credit ledger. This is the amazing creation of Nirmala Chechi, because there should not be any cash outflow. To avoid that cash outflow, this concept of duty credit ledger is created. So whatever duty drawback that you are claiming, we will give in that. Whatever incentive you are claiming under FTP, we will give in that. And this you use for payment of customs duty. You could not use it for payment of customs duty. Okay, you transfer it to another person, but don't ask us the cash refund. Okay, to avoid the cash refund, only this duty credit ledger concept created. But very important is that the amount in the duty credit ledger can be used only for payment of customs duty, but cannot be used for payment of interest, late fee, penalty, etc. So only for payment of customs duty only, and that to which customs duty? Basic customs duty only. That cannot be used for payment of IGST, GST compensations, etc. and all. Okay, so that is with respect to this. Then change in time limit for filing bill of entry. So previously the bill of entry needs to be filed within 1 working day from the date of arrival. So now what they did is that, so they are telling that before the date of arrival. Okay, before the date of arrival means, so today there is an arrival. So by yesterday night, midnight, the bill of entry should have been filed. Okay, so now they change. What if the yesterday is a public holiday? Let it be, that has to be filed. And can you file a prior bill of entry? Yes, within 30 days prior to the date of arrival, I can file a prior bill of entry. Means a prior bill of entry validity is only 30 days. The prior bill of entry validity is only 30 days. Okay, I can file a prior bill of entry also, and that should not be more than 30 days prior, within 30 days prior, and it should be filed at least by previous day to the date of arrival. And so if not filed, what will happen, sir? There will be a late fee that is payable. Then IGST computed on re-importation of exported goods. So generally, whenever we imported some goods on which customs duty paid, and those imported goods are sent abroad for repairs. So now after repairs, when the goods are coming back, we need to pay customs duty on fair value of repairs and freight and insurance both ways. That should be taken as a concessional value on which customs duty payable. No need to pay full customs duty on full value, only on the concessional value. What is the concessional value? Fair value of repairs plus freight and insurance both ways should be taken. For customs duty, for IGST also we need to take, because along with customs duty we need to pay IGST. For IGST also should we do the same? Yes, for IGST also we need to do the same. So that is this part. That is this part. Then faceless assessment is introduced in customs, and therefore we have right now an introduction to the faceless assessment. Okay, that is, whenever you file a bill of entry, and if the bill of entry is taken for scrutiny, so that will be assigned to an assessing officer, so physically located in any customs station which may not be in your jurisdiction. You are importing the goods in Chennai, so it does not mean that only the Chennai customs officer needs to scrutinize the bill of entry. That bill of entry can be scrutinized by a customs officer who is in Mumbai also, Mumbai port also. Okay, so that what will happen? So every port will not be busy, so that they will segregate the bill of entries to multiple officers, so that the scrutiny can be completed without having any pile up of the bill of entries, and the clearances will be faster. So for that reason, okay, so therefore it separates the assessment from the physical location of the port of import, mainly that only. So in faceless assessment, what will happen? It separates the assessment process from the physical location of port of import. Okay, and from importer's perspective, so any change in filing bill of entry, no, normally they will file bill of entry. Only thing, so it will be going to different customs officer than the jurisdictional. So what is the advantages? So enhancement of facilitation levels. So lot of officers are now available for disposal to do the service, and expediting assessment process, that they can increase the assessment process, they can speed up the assessment process, they can process more bill of entries in a day. Okay, then reorganization of faceless assessment groups. Okay, then this is known as group RMS. So risk management systems, we call it as a group. Then enhancing direct port delivery, automated generation of examination orders. So that is, whenever the officer is of the opinion that the bill of entry has a value which is not correct, then automatically they will pass an examination order. So the jurisdictional customs officer will go and verify the goods and will submit the report. Okay, and anonymized escalation. So which means that, so we don't know which officer will be taking to it. So therefore this corruption etc. will get reduced. So these are the advantages of the faceless assessment. So this is given in your study material as a small paragraph. So that much is only applicable. Then extension of foreign trade policy. The existing foreign trade policy is extended for a period up to 31/3/2022. So that's the reason why the 2015-20 foreign trade policy, still the same is applicable for your exam, even for May 22 exam also. But only one change that we have in this place, that is MEIS, like that one scheme was there. Merchandise export from India scheme. That merchandise export from India scheme is omitted, and in the place of merchandise export from India scheme, they added RODTEP scheme, because merchandise export from India scheme was not World Trade Organization compliant. Okay, so therefore it is not in compliance with WTO guidelines. Due to that reason, US filed a case, and in that case US won and we lost the case. So government asked the WTO to give a time to review, and accordingly they reviewed and they omitted MEIS, and in that place they added RODTEP, rebate of duties and taxes with respect to local supplies. Okay, remission of duties and taxes on exported product, So what is that? It will be given as remission. So there are many taxes and duties which are paid by the exporter on exporting the goods, and some taxes are already covered under the refund or incentives. For example, GST covered, import duty, customs duty covered, but some local taxes like mandi tax, local body tax, or even some municipality taxes. Okay, so these taxes, even value added tax and central excise duty, so still there, and there is some special cess, etc. So all these things, there is no mechanism to give the refund. So due to that reason, they are giving a remission. Okay, and this refund, whatever is there, will not be given in cash, but that will be credited to their credit ledger, duty credit ledger. So whenever they export against a shipping bill, so they need to generate an e-script, electronic script. So depending upon whatever is their tax burden, that is on local levies, so that will be given to them, and that they will generate a script, e-script, and that e-script will be credited to the credit ledger, duty credit ledger, and which can be used for payment of customs duty, or it can be transferred to any other person. Okay. So the rebate under this scheme shall not be available in respect of duties or taxes already exempted or remitted or credited. Okay. How that remission will be given? So just like MEIS only, so a percentage notified on the FOB value of exports or 1.5 times the value of such goods locally sold, whichever is lower will be taken. Okay, so what is that we will do? We will take, so export value, FOB value of export or 1.5 times of such goods sold in domestic market, whichever is lower, on that a percentage will be given as incentive. And here that incentive will be available provided you realize the export proceeds within the time prescribed under FEMA. What is the time prescribed under FEMA? 9 months is the time prescribed under FEMA. Within 9 months, if you bring the export proceeds, then only that rebate, that remission is available. Suppose if you are not bringing within 9 months, then we will never get that remission. Okay. Then ineligible supplies. So there are some supplies which are not eligible under this scheme. That is export of imported goods. We are importing and then exporting. We will not get this RODTEP. Export through transshipment. Imported from one country, transshipped into another ship and or another vehicle and taken into another country. We will not get any benefit there. And export goods subject to minimum export price. So this is the price at which only you need to export. Minimum export price. So this RODTEP will not come. And restricted goods and prohibited goods under FTP. So under FTP there are some goods which are restricted, requires license, prohibited, which cannot be exported. So for that RODTEP not applicable. Then deemed exports under FTP, that is sale to advance authorization holder, EOU, EHTP, STP, or supply of marine freight containers like that, or international competitive bidding project like that. We have some deemed exports. So in case of deemed exports also RODTEP not applicable. Supply of products manufactured by DTA to SEZ. So there are some goods which are manufactured in DTA, that is supplied to SEZ. So in that case also, RODTEP will not work. So these are all the points which you need to remember. Okay. So then products manufactured by 100% EOU, EHTP, BTP or customs bonded warehouse. So then also, RODTEP not applicable. And products manufactured are exported in discharge of export obligation under advance authorization or duty free import authorization. There already incentives are there. So again RODTEP will not be given. So these are the 9 cases where you will not get the benefit of RODTEP. Okay. Then principles of restrictions, prohibitions on with respect to imports and exports. That is, there are some imports and exports which are prohibited. What are they? For that, they have given certain principles. So when DGFT may prohibit import or export of an article to safeguard India's external financial position. If those goods are not prohibited, by importing those goods, the financial position of the country will deteriorate like that. Or on export of foodstuff or other essential products for preventing or relieving shortages. So whenever the food is scarce, say paddy is scarce or wheat is scarce, so then they may prohibit export of these food items. Then for preventing serious injury to the domestic industry when they feel like certain, goods, manufactured goods like electronic gadgets or some kind of food items like chocolates, etc., or some other products which may cause injury to the domestic industry, then also they can prohibit. Okay, on imports or export for application of standards or regulations for classification, grading and marketing. On import of fisheries, no, not allowed. Then on import to promote establishment of a particular industry. Okay, so they are importing, so they may prohibit that to promote the establishment of that industry. Example, Elon Musk coming to start, coming to sell electronic vehicles. So to promote the development of vehicle industry, so they will ask you come and start, don't bring. So they may prohibit like that. Okay, for protection of human or animal or plant life. Then for import and export of gold or silver, yes, they can prohibit import from this country, prohibited. Maybe that gold is of not the pure quality. For conservation of natural resources, they may prohibit export of some goods. And for India's obligation under UN Charter, so according to UN Charter, some goods should not be taken outside India, exported. So then like that, for protection of countries' essential security measures like pistols, guns, etc., so they can prohibit like that. These are the principles under which DGFT can prohibit import or export of goods. This is the summary of all the amendments, whatever are applicable for your May 22 exams. So what I have done so far is the quick revision of all the applicable amendments for you. Okay. So now what we are going to do is that we are going to take each and every amendment in detail. We are going to analyze and we are going to understand. Okay. So that friends, so if you have any not understanding this point, etc., don't worry. So all these things now I am going to discuss in detail. So now henceforth what I am going to discuss will be in a little slow manner, and I will be covering all the points and will be discussing illustrations, etc., related to that. Okay. And so now I request you to revise. When you are doing the revision, just this 1 hour part. So from 10:10 to this 11:14, 11:15, whatever I have discussed. So this 1 hour approximately, this discussion will be sufficient. So this provision summary will be sufficient for you to quickly revise. So revise it 2-3 times. So till the time you go for exam, so it will help you out. Okay. So now we are taking a break, and thereafter we are continuing with the detailed explanation of the amendments. Okay. Detailed explanation of the amendments we are going to discuss. And meanwhile, you just download the PDF and keep, and upon discussion of whatever have taken place, revision of amendments, you have any doubts, you can ask, so that definitely I will clarify. Okay. And sorry, maybe if my energy level is not great, if I'm not properly conveying, so I'm extremely sorry, because no, I met with an accident, so my hand and all got fractured. That's why I could not move my hand also. So full of bleeding yesterday. I went in one Uber car, and that car flipped upside down, and I fell down from that car. So full of cut and all hand. So that's why I could not. Okay. So I'm little, energy level is less. But I committed that I will take the session, so I am taking it. And if my energy level is less, forgive me. Okay, we'll take a break, and thereafter we will continue with the detailed explanation. Okay, welcome back. So have a look into this detailed explanation of the amendments. Whatever we have seen so far is the revision, a quick summary of the amendments. Now, the first amendment, that is related to segment 2, taxable event under GST, section 7, subsection 1, clause AA, widening the scope of supply so as to include the transactions between a person other than individual. Okay, what does it say? So a person other than individual, when provides services, okay, a person other than individual provides services to their members or vice versa, both are given. So for example, you take a partnership firm or you take a company. Who are the members of the company? Shareholders of the company. Now that company is providing some services to the shareholder like share transfer, etc., for which they collected some fee, share transfer fee. Will this be coming under supply? Yes. Even though they are providing this to their members, but it will come under supply 71AA. Then a club or an association is providing services to its members. So will it come under supply? Yes. Of course it will come under supply. It was coming under supply also previously, but now also it will come under supply. But only thing, not just a club or association, but any person other than individual. And members providing any services to the company, a partner providing any services to the firm, for which firm pays some money, or firm providing any service to the partner, for which partner pay the money to the firm. So that will also be coming under supply under 71AA. Okay. So say this. And is this applicable prospectively or retrospectively? They made it as a retrospective amendment applicable from 1/1/2017. Means some transactions on which they have not at all paid GST. Should they pay GST now, sir? Yes, they need to pay GST now. Why? Because it is made retrospectively with effect from 1/7/2017 due to that reason. Okay. And that consideration, there should be consideration, okay, there should be consideration. That consideration may be in cash or maybe in deferred payment or any other mode also. Okay. Then, so who is the constituents? Its members and its constituents. So they are treated as separate persons under GST. The principle of mutuality. What is that? Firm and partners treated as separate persons. Association and its members treated as separate persons. Company and shareholders treated as separate persons because of this section 71AA. For example, there is a Prem Nursing Home, a partnership firm. Okay. Is providing services related to medication to Mr. Jeevan Jain, one of the partner of this firm. Okay. Now, even though he is a partner of the firm, but the firm is providing nursing services, will it come under supply? Yes, it will come under supply 71AA. Of course, it is exempted supply. Yes. See, every activity will come under supply. But we need to check whether it is a taxable or exempted. But this is an exempted supply, correct or not? It is first supply, yeah, and thereafter we need to call it as exempted supply. Why it is exempted supply? Because healthcare services provided by clinical establishment, authorized medical practitioner, paramedics covered under exempted. Okay, then. So this is about 71AA. So actually, this they have added because of one Supreme Court case in West Bengal versus Calcutta Club Limited. So because of this case only, they just added this 71AA. Okay. So therefore, what they are telling is that unincorporated associations or clubs providing services to its members are exempt from service tax. So therefore, the same position is applicable even in GST like that. But to nullify that case of Supreme Court, they just added this 71AA. Okay. Then next, section 7, subsection 1, capital A deals with what? Classification of supply into goods or services. In that, one point is given: supply of goods. Okay. Any provision of goods by a club, association, or society to its members will be treated as supply of goods. But now, why we need to treat it as supply of goods? It can be supply of goods or it can be supply of services. Once the activity becomes supply, so we need to see what is the nature of that activity. If that activity is service, then it will be treated as supply of service. If that activity is goods, it will be treated as supply of goods. And accordingly, we will classify. So the deeming fiction of always it will be treated as supply of goods point is now omitted. Okay, because of this 7 subsection 1 clause AA amendment, adding that clause. So they have omitted a point in 7 subsection 1 capital A, classification of supply into goods or services. Then export of services. What are the conditions to be fulfilled to call an activity as export of services? Total 5 conditions. What are those 5 conditions? Number 1. So where the location of supplier should be? Location of supplier should be India, and location of recipient should be outside India. And where the place of supply should be? The place of supply should be outside India. Then supplier should have received the consideration. How the consideration should be? The consideration should be in convertible forex. But in case of services to Nepal and Bhutan, with respect to services to Nepal and Bhutan, it should be in Indian rupees. It should be INR. It should be Indian rupees. Okay. Then number 5. What is the 5th condition? Supplier and recipient are not two establishments of the same person. Okay. Supplier and recipient are not two establishments of the same person. Supplier and recipient are not two establishments of same person. What does it mean? For example, you take Infosys India. Infosys India starts a unit in Infosys US. Infosys India and Infosys unit are two establishments of the same person. So therefore, even if location of supplier India, location of recipient outside India, place of supply outside India, consideration is in convertible forex, but the service will not be treated as export of service because they both are two establishments of the same person. Now, what if we start a branch or a unit or an office there, and that is being incorporated in that country, under the laws of that country. Okay, so there it should be incorporated following the law of that country. Then in that case, incorporated means what? They should get a separate legal existence in that country. Then in that case, even though it is a branch or an office or a unit, it will be treated as a different person, and this will qualify for export of service, provided other conditions should be satisfied. Okay, so that is this point here related to export of service. This can be tested in exam. Then next, so these are the amendments we had in segment 2. Now the amendments in segment 3, that is invoice and time of supply. First, e-invoice not applicable to government and local authority. Okay, so same way dynamic QR code also. So already I gave you the clarity in the summary that who is required to generate a e-invoice? Every person, every registered person whose aggregate turnover during any of the preceding financial year between 2017-18 full year 2017-18 to 2020-21, they are required to give e-invoice for the B2B supplies during the current year 2021-22. Got it? So 50 crores. Previously it was 500. Now then they brought down to 200, then 100, and now it is 50. Okay. In future, they have reduced it to 20 crores. That's already in place. But that is for November 22 exam, not for you. Okay. So, therefore, this particular person is required to give e-invoice for B2B supply. Number 1, validity we have seen. Number 2, so what is this e-invoice? Simple here. Your normal invoice, you will put it in the invoice registration portal. And when you put it in the invoice registration portal, so there is a government portal, invoice registration portal. you need to convert your normal invoice into a machine readable format called as .json, and you need to upload it into the invoice registration portal. And when you upload in the invoice registration portal will be giving, for this particular e-invoice, three things. An invoice reference number, a hash will be generated. So like a encrypted code will be generated, a hash will be generated, then a QR code will be attached, and then a digital signature will be done. And from this, the information will directly go to the GST portal. From this, the information will directly go to the GST portal, and it will be entered in the GSTR 1 of the supplier and GSTR 2A or 2B of the recipient. From where? From the e-invoice registration portal, invoice registration portal. And also it will go to eway bill portal. So at the time when you prepare the eway bill, so invoice number when you enter, automatically the auto-filled information will come. Okay. Now this e-invoice is not at all required irrespective of the aggregate turnover to some people. Who are they? That's what I said as biggest. B for banking company. So a banking company or a financial institution or an NBFC, definitely their turnover. And one more thing you need to remember, e-invoice is for goods as well as services, not necessarily only for goods. Okay. Whether the registered person may be engaged in supply of goods or supply of services, e-invoice is required. Okay. Now to whom e-invoice is not required. So that's what I told you, that is biggest. Okay. BIGGEST. B for banking company, including financial institution or NBFC. For them it is not applicable. Why? Because banking companies, if they need to, like mostly they make B2C. And for B2C, dynamic QR code, of course, that is also not required. Then this will be administrative burden on them. So that's why. Then I for insurance company, same. Then G for GTA services, not any other transportation of goods service provider. Only goods transport agency. Only goods transport agency. If there is, any other person like railways, which is engaged in transportation of goods, whether e-invoice is required, now not required, because government, Indian Railways is government now, due to that reason. Okay, sir. What if it is airlines which is engaged in transportation of goods by airways, whether e-invoice is required? Yes. Sir, airlines aggregate turnover during the previous year would have exceeded 50 crores easily, and they are required to give e-invoice for B2B supplies. That restriction is not there. Okay. And so goods transport agency. Who is a goods transport agency? Any person engaged in transportation of goods by road and issues a consignment note by whatever name called is known as a goods transport agency, not required to generate e-invoice. Then government department, let it be central government department or a state government department and a local authority, they are not required to give invoice. Then exhibition of a film in a multiplex theatre. For example, you take PVR cinemas. PVR cinemas aggregate turnover during a previous year, easily it will cross 50 crores. And when they make B2B supplies, so corporate ticket booking will be done. So when corporate ticket booking is done, in that case, so whether that requires any invoice. So for example, recently in Telugu, one movie got released, Bhimla Nayak, like that one movie. And in Tamil Nadu, one movie got released, okay, Valimai. So these two movies, so Ajit and Pawan Kalyan in these two states have largest fan following. So therefore, what they will do is that lot of corporates, so even the people who are working there as managers or team leaders, etc., they are all fans. So they will ensure that with HR they will speak and they will do a corporate ticket booking. So in one complete show, the corporate, all the employees will go. So that happens. Now in this case, it is a B2B, B2B. So PVR cinemas is registered and the recipient is also registered. So then it should be coming under e-invoice requirement, no, not required. So why? Because specifically given that exhibition of a film in a multiplex theater, then yes, that is SEZ unit, not SEZ developer. So for example, SEZ, there is a SEZ developer who is providing the services. So e-invoice definitely required. But a SEZ unit, inside that SEZ, there will be one unit, the one who is doing business. So that person do not require to give e-invoice. Why? Because SEZ unit or SEZ developer who is not required to give. Only SEZ unit, don't forget. Then T for transportation of passengers by any mode here. For example, you take Indian Airlines or Indigo Airlines, SpiceJet. So definitely their turnover during the previous year exceeds 50 crores, any previous year. Now they will be making B2B supply, correct? For example, there is a chartered accountant who need to go for outstation audit. So definitely the ticket will be booked in the name of the firm. Same way any employee is going for business visit, the ticket will be booked in the name of the business. So then GST and we give. So for that Indigo Airlines or Indian Airlines, it will be a B2B supply. So whenever they are making a B2B supply, so whether they need to give invoice, not required, because any transportation of passenger service provider is not required to give e-invoice. So okay, so this you remember, this can be tested in exam. Okay, then next, because I was expecting this for last attempt November 21, they did not touch, so maybe possible for May 22, so that's why I'm stressing on this. Then clarification on dynamic QR code. What is a dynamic QR code? Simple here, one invoice will have a QR code fixed on it, that is known as dynamic QR code, and that QR code is not static. When you go to lot of shops, now even one who sells tender coconut also on roadside is keeping GPay. Auto wala is keeping GPay. Yes, every person here. In future, it so happens that we all put that QR code on our hand, body, etc. as a tattoo. You want to pay money, scan and pay. Like that also, future it will come. Okay. That scan and pay is not called as dynamic QR code. That is not dynamic QR code. That is static QR code. Okay. So yes, future definitely that will happen. That I will put a tattoo on my hand. Okay. QR code and UPI ID linked with QR code. Now you want to buy Google Drive lecture. Come, scan and pay. Like that also. You understood? So people are going in a crazy world. So metaverse and all is coming. So anything can happen. And therefore, this is static QR code. About that we are not talking. We are talking about dynamic QR code. What is this dynamic QR code? With respect to every transaction, the QR code will be generated. That is known as dynamic QR code. With respect to every transaction, one QR code will be generated. That is known as dynamic QR code. Okay. And this dynamic QR code has certain fields. So taking these fields, this data, a QR code will be generated, a unique QR code will be generated. So QR code is what? Just nothing but the strings, na? So QR code is nothing but the strings. So different fields or different data is taken and a code will be generated. Okay. So what are those fields that needs to be entered? So we know that fields that will be, GST of the supplier, UPI ID of the supplier, and then bank account and IFSC of the supplier, invoice number and date, value and the tax. These fields will be embedded into the QR code. And there is a mandatory requirement that if a person, registered person, whose aggregate turnover during the previous year exceeds 500 crores, any previous year, from 2017-18 to 2020-21, any previous year if it exceeds 500 crores, so they are required to give dynamic QR code in the invoice. So when they are giving dynamic QR code in the invoice, so that payment should be collected through the dynamic QR code only in case of B2C supply. Remember, in case of B2C supply. Okay. For example, I want to purchase a mobile phone from Amazon. And Amazon itself is selling. The seller here is Amazon, not some other person. Amazon itself is selling. Okay. So seller is Amazon, e-commerce operator also Amazon. Okay. Now Amazon's turnover during the previous year exceeds 500 crores any previous year. Yes. Now that mobile phone, when you order and pay on delivery option, under pay on delivery option, what will happen? What will happen? So first, so he will be bringing the parcel, and in the parcel itself there will be a sticker. That sticker will have a QR code, and they will ask, scan this and make the payment. Dynamic QR code. When you scan it itself in your GPay, the amount will come there. The amount will come. Okay, when you scan itself, the amount will come. You will not enter the amount. In static QR code, you need to enter the amount. But in dynamic QR code, you don't have to enter any amount. The day when you scan it, automatically the amount will be coming. Okay, so that is known as dynamic QR code. And you have to make payment through that way only. I will pay by cash, I will pay by account, etc. and all. They will not agree. If you want to pay that way, what they will do is that person, the delivery person is there now, he will collect that in cash and he will make the payment by scanning the QR code. Okay, so this is the usual way that they need to do. Now, what if it is a prepaid order? Prepaid order. You paid the money using your credit card or debit card, etc. You made the payment and then the product is delivered to you. Now, in this case, payment is made before preparing invoice now. So then in that invoice, so that payment reference, suppose if you are making payment by credit card, that credit card number, last 4 digits, a debit card, last 4 digits. Suppose if it is through any, transfer, fund transfer, etc., the transaction ID, so that will be mentioned in the invoice. That is this. Okay. Now, they gave a circular for giving certain relaxations in the dynamic QR code here. Okay. And one more point. Sir, what if Amazon is delivering the product belonging to some other supplier? Then should we see the turnover of Amazon or should we see the turnover of that supplier? For example, there is one supplier. Okay, so that person, say Apple itself, or you take Samsung or any other supplier here. So they wanted to sell the product through Amazon. So now, while determining this dynamic QR code, we should see the turnover of Amazon or we should see the turnover of that supplier to know whether dynamic QR code is applicable. Whose turnover we should see? That supplier's turnover, not Amazon's turnover. That supplier's turnover we need to see. If that supplier's turnover during the previous year, any previous year, exceeds 500 crores, then dynamic QR code will be required. What is that supplier? Same way like how I said QR code will be given, etc. Suppose if that supplier's turnover during the previous year, any of the previous year, does not exceed 500 crores, then simple pay on delivery option. Okay, so normal, you will be making payment, the product will be delivered. Then that will be applicable. Now, look into this case 1. If the supplier provides or displays dynamic QR code, but the customer opts to make payment without using dynamic QR code, okay, and supplier provides the cross reference of such payment made without use of dynamic QR code on the invoice, what will happen? Can it be done? Okay, so yes, if the payment is made, so then the payment reference should be given. Okay, see this. In case where the supplier has digitally displayed the dynamic QR code and the customer pays for the invoice using any mode like UPI, credit or debit or online banking, etc. Okay, and the supplier provides a cross reference of the payment and the amount of payment, mode of payment, etc. or in cash without using dynamic QR code, and supplier provides a cross reference of the amount paid in cash along with the date of the payment or invoice. Said invoice have been deemed to be complied with the requirement of dynamic QR code. Listen. This fact needs to be entered in the invoice, which means the payment is made when? The payment is made when, yaar? The payment is made before invoice. Sir, how will I enter the fact in the invoice? Will I do time travel or what? I will go back and again I enter. not possible means the payment is received before preparing the invoice. Then the cross reference I can enter in the invoice. Should it be entered in the invoice? Of course, sir. On the invoice, on the invoice, on the invoice, on the invoice, on the invoice. How can I enter on the invoice? If the payment is received before invoice, only I can enter here. Otherwise, I cannot enter, darling. You understood? So then, next, if the supplier makes available to the customer an electronic mode of payment, where though dynamic QR code is not displayed, but the details of merchant as well as transaction are displayed or captured otherwise. Okay, now again same. Suppose if the payment is collected through the QR code, normal. Which QR code? Which QR code? Static QR code. Then the cross reference should be given on the invoice. The cross reference should be given on the invoice in all these cases when the payment is collected. Payment is collected before preparing the invoice. The cross reference should be given. Okay. If the payment is made after generation or issuance of invoice, the supplier shall provide. The supplier shall provide. Shall. Mandatory. So the supplier should give dynamic QR code and collect the payment through dynamic QR code only. Only when the payment is collected before the date of invoice, either through debit card, credit card, UPI, or any stupid card, then the document reference number, the credit card or debit card or transaction ID. If it is UPI, scanning, QR code, static QR code, then also the transaction ID. So that needs to be entered. So suppose if the payment is collected after generation of invoice, then in that case, definitely there should be a dynamic QR code present. Okay. Then, in case of prepaid invoices, where payment has been made before issuance of invoice, dynamic QR code is not required, na? Yes or no? Invoice would be deemed to have complied with dynamic QR code if the payment reference is given. Okay. So therefore, only in case other than prepaid supply, only dynamic QR code required. So in case of prepaid, dynamic QR code not required. Then this part, in case of part payment has already been received by the merchant, either in advance or by adjustment, before the dynamic QR code is generated, what amount should be provided in the dynamic QR code for the invoice? Balance amount plus the proportionate tax. Whatever balance amount that is collected plus the proportionate tax, that should only be mentioned. Okay. Then, next, whether dynamic QR code is provided on invoice issued to a person who has obtained unique identification number. This, let's see what you will answer. There is a person who is holding unique identification number. To that person we are making supply. And our aggregate turnover during the previous year exceed 500 crores during any of the preceding financial year. Now my recipient is a UIN holder. Whether I should give e-invoice or dynamic QR code. Is it B2B or B2C? If it is B2B, 500 crores means both are applicable now, darling. Both more than 500 crores means dynamic QR code is also applicable, invoice are also applicable, correct? Both are applicable. So then, in that case, whether I need to give e-invoice or dynamic QR code, why? क्यों e-invoice applicable? क्योंकि e-invoice 50 crores, dynamic QR code 500 crores. 500 means you cross 50 crores. So that's why both are applicable. Okay. Don't break your head there. Now you need to break head in a different place. That is UIN holder. What is your answer? UIN holder, what is your answer? B2B or B2C? UIN holder is who? Just because he gets one identification number, we can call him as a registered person. Huh? We cannot call him as a registered person. He is an unregistered person only. But he will be getting refund of GST paid on inward supply. A UN embassy or a consulate or UN organization. So some specialized agencies whose outward supplies are exempted will be obtaining a unique identification number to get the refund of GSTIN paid. So the refund of GST paid. Instead of giving a GSTIN to them, we give a unique identification number to them. that does not mean they are registered. So it's a B2C. So dynamic QR code is only applicable, not B2B. It's B2C only. Just because of giving refund, one identification is given. So therefore, don't call them registered. B2C. So which one applicable? Dynamic QR code only. Dynamic QR code only. Then, in case if UPI ID is linked to the bank account of the payee or person collecting the money, whether bank account and IFSC details also needs to be provided separately in dynamic QR code along with UPI ID. Okay. For example, I'll tell you. My UPI ID is THARUN'S at OKHDFC Bank. Now, for example, I'm not sharing my UPI ID and all. For example, okay, don't think he's sharing UPI ID for collecting some money. Why will I collect money? Or I don't need any of your money. So whatever I am earning, that is sufficient for me. So I'm just giving for example. Don't take me wrong. So Tarun Raj at OKHDFC Bank. I have an account in HDFC Bank, and that HDFC Bank gives me my UPI ID. So then it will be called as UPI ID linked with the bank account. Suppose if I have a bank which is some bank, some Dena bank, like that one bank is there, or this Cosmos bank, like that one bank is there, Realit bank is there, Cosmos bank, like that one bank is there. In that bank I am having account. Now in that bank, when I am having account, my UPI ID will not be at Cosmos, Cosmos. No, it will be at YBL, because they will be having some kind of connection with Yes Bank Limited or OKICICI or OK Access. With Access Bank, they will be having a connection. Means my UPI ID and the bank account are not connected. So then I need to give both my bank account as well as my UPI ID. Suppose if my bank account and UPI ID are connected, my bank is only giving the UPI, then in that case, no need to enter the bank account. That is this point. Then, in case where the payment is collected by some other person other than supplier, e-commerce operator will collect, sometimes the delivery partner will collect. Yes, no. Dunzo. In Dunzo, you book something from the supplier shop and you can make the payment or you can pay on delivery. Okay, so that person will bring the packet. It's because majority of the time at my house, so we procure lot of necessities like provisions, etc. through Dunzo only. Trust me. See, I am lazy here because I don't have time to take classes and prepare book, and my mind is completely here. So therefore, I install Dunzo app in my wife's mobile, so she will be ordering and the product will come and pay on delivery. She is very careful. She will not make the payment in advance. So because she has a fear that what if that person takes away that and run, so she will not. So therefore, she will select pay on delivery. The product will come at that time. Whether that person's UPI will be mentioned. QR code is there. Next time onwards, you buy anything from Dunzo, the QR code will be coming. Yes. So now, in this case, so whether the UPI ID of the supplier will be mentioned or the Dunzo's UPI ID mentioned, the Dunzo's UPI ID will be mentioned. Okay. Sir, for example, when we get UPI ID from other mobile wallet providers like Paytm, PhonePe, Amazon Pay, Airtel Payments Bank, lot of, okay. They also provide UPI ID. That means UPI ID is not linked to the bank account. Not linked. It is not linked. Because this is separate and your bank account is separate. Using this, the bank account cannot be traced. Okay. Due to that reason. Then, next. So, in such case where the payment is collected by some person authorized by the supplier on his or her behalf, the UPI ID of such person may be provided in the dynamic QR code instead of UPI ID of the supplier. Then next, in case of retail sales over the counter, it may not be possible for the merchant or supplier to provide details of invoice number in the dynamic QR code displayed to the customer on payment counter. Correct? So that is, invoice number will be based on system, and that invoice number may not be practically possible to be linked to the dynamic QR code. So because the data entry work will be there. For example, supermarket you take. Supermarket, so their turnover during the previous year exceeds 500 crores. Big Bazaar. Sir, turnover or aggregate turnover? Turnover or aggregate turnover? Turnover or aggregate turnover? So what difference are both are same only? No. Turnover is state-wise. Aggregate turnover is all India basis. Turnover is state-wise, aggregate turnover is on an all India basis. How can you compare these two? So whether we need to take turnover or aggregate turnover for determining e-invoice and dynamic QR code. E-invoice, dynamic QR code, turnover or aggregate turnover. Aggregate turnover. What turnover? What turnover? Aggregate turnover. Aggregate turnover. Aggregate turnover. You are not turnover. Aggregate turnover should be taken, and that aggregate turnover on all India basis. Now you take Big Bazaar. Big Bazaar aggregate turnover on all India basis exceeds 500 crores easily. Now they are giving a invoice with dynamic QR code for B2C supply. Do you think, wait, so in the customer queue, will they say, will they make, wait sir, please wait, we will generate the invoice, we will link that with QR code, and thereafter that QR code we will attach and we will give it to you, you make the payment by that. No, yeah, that is really difficult. So what they are doing is that there is a device. That device will have automatic dynamic QR code. Automatic dynamic QR code means what? One device will be there. You scan and make the payment. Automated dynamic QR code. The device will be like a mobile that will be connected to a wire to the billing system. Now the bill will be generated here. Enter. One QR code will come. They will ask the customer to make the payment through that QR code. Okay. And captured up. Next invoice. Again the device will have a different number, different QR code. You understood? Now, will the invoice number needs to be entered? Not necessary. So that's why they follow a unique reference number. Okay. If invoice number is not available, when payment is collected by displaying the QR code digitally, the unique order ID or the unique sales reference number may be provided in the place of invoice number. Oh, that's it. Over. These are the points given in that circular here. Then one more circular is given related to carrying the physical copy of the invoice. You know that there will be 3 copies of invoice in case of goods: original, duplicate and triplicate. Original is for what? Buyer. Duplicate is for transporter. Triplicate is for the supplier. Okay, accounting purposes. And the transporter should carry this tax invoice and e-way bill along with the vehicle. Okay, along with the vehicle when he is transporting, and produce before the proper officer the invoice and the e-way bill. Okay, upon verification. So proper officer under section 68 is having power to intercept the vehicle and check for the documents, etc. Goods physical verification also. In that case, the invoice and the e-way bill should be produced. Suppose, sir, if it is without supply, then delivery challan plus e-way bill. The movement of goods is not under supply. Say goods are taken for job work, or goods are taken from head office to the branch, etc. like that. Then it should be under the cover of a delivery challan. Okay. Now, so therefore, the goods should accompany invoice or bill of supply or delivery challan. When bill of supply, exempted goods, bill of supply, as the case may be, and a copy of e-way bill number either physically or mapped to RFID device. What is this? Radio frequency device, just like your fast tag here. So RFID device is like just like your fast tag. So there will be one RFID device, a small one, and so that RFID device will have one code, and you can download one app, Android or iOS app, and in that app you enter the code of that RFID device and scan all the e-way bills. Every e-way bill will have a QR code. Once the e-way bill is generated, the e-way bill will have one scan code, QR code. So scan that code, and in the mobile when you do the scanning, so that particular e-way bill data will be captured or mapped to that RFID device. Now, so whenever the proper officer want to intercept and check the vehicle, he will be having a RFID reader. So that RFID reader, like a camera, so they will be scanning that RFID device. So all the e-way bills mapped to that RFID device will be able to be viewed by the proper officer. Okay. Then embedded onto the conveyance in such manner as may be notified by the commissioner. Further, so remember, for taxable supplies, okay, for taxable supplies we need tax invoice plus e-way bill, or delivery challan plus e-way bill. Okay, whereas for exempted supplies, for services whether e-way bill required, no, only for goods. We are talking about goods here. Okay, exempted supplies, exempted goods, exempted supplies, only bill of supply. Okay, now further, Rule 138.2 after being amended states that in case the invoice is issued in the manner prescribed under sub-rule 4 of Rule 48. What is that? E-invoice. E-invoice has three things. What are they? Invoice reference number, QR code, and digital signature. Whether the QR code in the e-invoice and the dynamic QR code is one and the same? No. The QR code in the invoice and the dynamic QR code is not one and the same. That is different. This is different. This dynamic QR code you are generating through your application. There are a lot of open source applications for generating dynamic QR code. Whereas the QR code in invoice is given by invoice registration portal. So e-invoice, whatever is there, in case invoice is issued in the manner prescribed, that is e-invoice, one QR code will be there now. That also, you can produce, okay, electronically for verification by the proper officer in lieu of physical copy of the tax invoice. So no need to produce it physically. Electronically if you produce also it is okay. Just the QR code if you produce it is okay. So this QR code also can be mapped to the RFID device, sir? Yes, that can be done. Sir, one transporter may be taking number of goods from various persons to various places. Does each e-way bill has to be scanned for RFID? Yes. So all the e-way bills will be scanned into the RFID so that it gets registered into the RFID. Okay. For example, one journey it is going. So one trip from Chennai to Bengaluru. What are all goods that they are taking in the trip? So that e-way bill should be mentioned. After unloading the goods in Bengaluru, another trip number 2 from Bengaluru to Mysuru. So then Bengaluru to Mysuru, some goods which are taken, so that e-way bill will be scanned to the RFID device like that. Okay. So everything should be mapped to the RFID device, or convert all these e-way bills into a consolidated e-way bill, EWB2. Consolidated e-way bill, EWB2, and take the e-way bills along with the consolidated e-way bill along with the journey. So physical copy. Okay. So a conjoint reading of Rule 138.1 and 138.2 clearly indicates that there is no requirement to carry physical copy of the tax invoice where e-invoice has been generated by the supplier. Okay. Understood here? Then next. So the next is place of supply. So we are moving on to the place of supply area. So segment 2 taxable event we completed the amendment. Segment 3 place time of supply invoice. In time of supply we don't have any amendments. Mostly on invoice only we had that we discussed. Then segment number 4 in taxable event again a comment based question only, and in segment 3 also a comment based question only. Now we are going to discuss segment 4 place of supply. Here there are only two amendments. So that we are going to understand. First we have section 13 of place of supply. Section 13 of IGST Act. Section 13 of IGST Act. POS in case of performance based services with respect to goods. Performance based services with respect to goods. Okay. Place of supply with respect to performance based service in relation to goods. What is the example of performance based service in relation to goods? Like repairs, maintenance, overhauling, or technical inspection, physical verification. Okay, all these will come under performance based service in relation to goods. Okay, now, so what is that it says? If physical presence of the goods required, if physical presence of the goods not required. Okay, physical presence of goods required, physical presence of goods required, physical presence of goods not required. Okay, physical presence of goods not required, physical presence of goods not required means how if physical presence of the goods is not required, we will do performance based service in relation to goods. Maybe by remote here. For example, there is one computer numerically controlled machinery is there. One computer numerically controlled machinery is there. So I will take the access of that machinery through the IP address and I will run the debugging as to what is the error that has happened in that. Now in this case, whether physical presence of the goods are required, no. So then inspection, audit, internal audit we are doing. When we are doing internal audit during COVID, you know what has happened? So many people, took the camera, it's promise. During COVID, internal audit is done. What internal audit they did? So I was taking class in YouTube, Zoom, etc. So our people were completing the, physical audit, that is inventory audit, through the phone itself. Okay, so branch stock needs to be verified. Okay, warehouse. Okay, sir, warehouse, turn on the camera. WhatsApp call. Here WhatsApp call. Whether that product is there, yes, verify it. You understood? Inspection is done through mobile. Therefore physical presence of the goods not required. Or not like that. If physical presence of the goods not required, we will take location of goods will be taken as the place of supply. So what will be taken as place of supply? Location of goods. No exception to this. Location of goods will be taken as the place of supply and there is no exception to this. Whereas if physical presence of the goods are required, means if I need to do any repair, you give me the product, I do the repair on the product, then the place of supply will be location where services are actually performed. Location where services are actually performed. Location where services are actually performed, that will be taken. Understood or not? So location where services are actually performed. For this we have 4 exceptions. For this we have 4 exceptions. Okay, 4 exceptions are there where place of supply is location of recipient, not location where services are actually performed. Place of supply will be location of recipient. What is the first exception? Goods are temporarily imported into India. For example, I am one consulting engineer. Goods are imported into India. for carrying out repairs or any other process, and I completed the repairs or any other process and taken the goods outside India after repairs or process without being put to use. Without being put to use, it should not be used, okay, in India. Without being put to use, it is taken outside India. Then in that case, what will be taken as the place of supply? The place of supply will be taken as the location where service are actually performed. Then supplier in India, place of supply India, and recipient outside India, it will never qualify for export of service. That's why they made location of recipient as the place of supply. That is one exception. Another exception, if drugs are being imported for carrying out clinical research. Now, in that case, so on these drugs, what will be taken as a place of supply? Location where services are actually performed, because physical presence of the goods require na. So then it will never become export of service. So they are telling that location of recipient will be taken as a place of supply. It is already covered under the first exception, then why is it given separately? Because in the first case, it should be exported after use. But in this case, it need not be exported after use due to that reason. Okay, it need not be exported after use due to that reason. So location of recipient in case of drugs imported for testing. Third, in case of repair, maintenance and overall, okay, repair, maintenance and overall of aircraft or its parts used in the course or furtherance of business of a person. So it's coming to India, I am providing repair services, location of recipient will be taken, not location where services are actually performed. Same way now they added vessel, supply of maintenance, repair and overall service. Okay, MRO, maintenance, repair, overall service. In respect of ships and other vessels, their engines and components or parts thereof, supplied to a person for use in the course or furtherance of business means what? So that person is using that vessel or a ship in the course or furtherance of business. It is not his personal vessel, okay, used in the course or furtherance of business. Then place of supply will be the location of recipient of service, okay. Then so that means eway bill details are scanned into the RFID so that it is viewed by the officers. True, yeah, correct. Then clarification on the doubts related to scope of intermediary. What is the meaning of intermediary service? So first, what is the need of knowing this intermediary service? We have section 13. What does it say? Section 13 of IGST Act. Section 13 of IGST Act says, in case of intermediary services, so we will take place of supply as location of supplier. Place of supply as location of supplier. Okay. So now, so who is called as an intermediary? So it can be intermediary for goods, he can be intermediary for services. But who will be called as intermediary? An intermediary is someone who arranges or facilitates the supply of goods or services or securities between two or more persons. Okay. So that is arranges or facilitates transaction. Arranges or facilitates supply of goods or services. Okay. So first there is a main supply. What is that main supply? Supply of goods or services. And the one who is arranging or facilitating the main supply. The one who is arranging or facilitating the main supply. That person is only known as intermediary. Okay. So first there is a main supply and there is an ancillary supply. That ancillary supply is intermediary service, and so it can be any person. So they are not making the main transaction. They are only doing the supportive role. They are only the subsidiary are doing supportive role. Okay. And so in case where the person supplies the main supply on a principal to principal basis, the supply cannot be called as intermediary. For example, a subcontractor, like a contractor, outsources the work to a subcontractor. The subcontractor provides the services. So that cannot be called as intermediary service. Subcontractor provides the main supply either fully or partly and does not merely arrange or facilitate the main supply. They are not called as intermediary. So let's try to understand this with the help of some illustrations. These illustrations are given in the circular itself, okay? So I did not create this. It was given in the circular. A is a software company which develops software for the clients as per their requirement. So A is a software company. A has a contract with B for providing some customized software for its business operations. A outsources the task of design and development of a particular module of software to C. A has entered into contract with B to provide the services. A part of the work is outsourced to C, for which C may have to interact with B to know the specific requirements. In this case, now tell me, is C an intermediary? No. No. Why C is not an intermediary? Is he facilitating or arranging transaction? No. A part of the work which A has to do, B is doing, or C is doing. So that will not be coming under intermediary services. Then what it is? Normal supply of services, software development services. For software development services, what will be taken as the place of supply? We don't have any specific provision. We will take, general provisions, location where services are actually performed. So that will be taken. Okay. Then illustration 2, you see, an insurance company B located outside India requires to process insurance claims of its clients in respect of the insurance service being provided by B to its clients. For processing insurance claims, P decides to outsource this work to some other firm. For this purpose, he approaches Q, located in India, for arranging insurance claim processing service from other service providers in India. See this? There is an insurance company P required to process the insurance claims of its clients. Okay. For processing these claims, P decides to outsource the work to some other firm. So that insurance company wanted to outsource the work to some other firm. For outsourcing the work to some other firm, they approach Q to find the person who will be able to do the processing. To do the outsourcing, they are asking Q to find the person. Now Q is an intermediary. How, sir? Q is an intermediary. Q is not doing the outsourced work. Q is identifying the person who will do the outsourced work. So he is facilitating or arranging transaction in securities. You know what? So intermediary means, in our normal language we need to say broker, agent, that person. You understood or not? So the broker or the agent will be taken. Okay. So Q contracts with R, who is in the business of providing such insurance claim processing service, and arranges supply of insurance claim processing service by R to B. So now in this case, R is the intermediary. No, R is not intermediary, because R is the one who carry out the outsourced work. He is working on a principal to principal basis with P. That is not intermediary. Whereas Q identifies R and brings it to P, for which he gets some commission. So that is intermediary service. Okay. Then illustration 3. A is a manufacturer and supplier of computers based in USA and supplies its goods all over the world. As a part of this supply, A is also required to provide customer care services to its customers to address their queries and complaints relating to the said supply of computers. A decides to outsource this task of providing customer care to a BPO. Again, B is not providing intermediary service, because they are providing the customer care service which A has to provide. So that is just outsourced work only. So not an intermediary. Understood? So now, what is the conclusion we can draw from this? What is the conclusion we can draw from this? If a person if a person carries out the outsourced work, okay, carries out the outsourced work, then such person is not called as intermediary, okay, you understood? For example, I have to sit with my son and daughter to make their homework, to complete their homework, okay, in the school. School, lot of work will be given. I need to sit with them and complete the homework for them. I need to teach them, etc. Now, every time it may not be possible for me to do that, okay, because I am teaching you the homework, so where I have time for them. So therefore, what I will do, I will identify one teacher to do this work. Now the teacher is not intermediary. To identify the teacher, I will approach some service providers like Urban Pro, like that one app is there, Urban Pro, service provider. Through that Urban Pro, I will identify the teacher. So that Urban Pro will be called as intermediary. Understood? The teacher is not intermediary. Then, sir, in simple terms, we can say that in case of intermediary, there should be three parties and the middleman is the intermediary. And not necessarily like that, Rahul, because even when you outsource the work also, there are three parties. So, therefore, that outsourced work will not be treated as intermediary. The one who just facilitates or arranges the transaction. So, middleman or, he is not the main party to the transaction. He is just a middleman. Okay. So, then it will be treated as intermediary service. Then, next, we have input tax credit. So, in this input tax credit, already we discussed the delinking of invoice to the credit note, debit notes. Okay. So, what is this? Let's try to understand with an illustration first. So, a debit note is dated 7/7/2021. So, what is the financial year for which the debit note is given? 7/7/2021 means financial year 2021-22. Financial year 2021-22. Okay. Financial year 2021-22. Invoice. This debit note is with respect to an invoice. So, whenever invoice value increases, the supplier will be giving a debit note to the recipient. Now, you understood or not? So, that debit note is dated 7/7/2021, is issued in respect of the original invoice dated 16/3/2021. So, 16/3/2021 comes in which financial year? 2021. Okay. As the invoice pertains to the financial year 2021, the relevant financial year for availment of ITC in respect of the said ITC shall be 2021. But means 2021, if there is any invoice, what is the time limit for availing ITC of that 2021? That is 20th October of the succeeding financial year. Due date of furnishing GSTR 3B of the succeeding financial year or date of filing annual return, whichever is earlier. So therefore, we need to take 2021. So that is 20th October 2021 or date of filing annual return, whichever is earlier, not due date of filing annual return, actual date of filing annual return. And remember, usually annual return due date is 31st December. Which idiot will file annual return before 20th October? 31st December means our people will not file even on 30th December. Okay. So who will be filing on before 20th October and all? So therefore, usually 20th October. For debit note, as debit note comes in financial year 21-22, so we need to see the ITC for 21-22, which means 20th October 2022 or date of filing annual return, whichever is earlier, like that. Okay. Suppose if a debit note is issued on 10/11/2020 in respect of invoice dated 15/7, same way we need to see for debit note ITC for the period 2021. Okay, 2021. and accordingly, so we need to take 2021 30th, like 20th October 2021 or the date of filing annual return for the financial year 2021, whichever is earlier. Okay, that is this. So from these two illustrations, what is that you can understand? That is, whenever the debit note is issued, for the debit note, it is dealing with the invoice. So we need to see the debit note date only. And with effect from when this provision is applicable. Okay, that is 1/1/2021 is the effective date. Okay, so that is, suppose if it is before the period, even though before the period they are giving a circular clarifying that even for the period before the date of this notification. See, actually this notification was given in 1/1/2021. It was already an amendment for November 2021 exam. But one circular has been given stating that even for the period before 1/1/2021 also, you need to deal in the credit debit note with the invoice. That's what the circular says. Okay. For that only they just gave this circular. Then ITC 4. Yes, this amendment was there for December 21 exam itself. But the circular says this amendment, even though comes with effect from 1/1/2021, but even for the period prior to 1/1/2021, if there is any debit note or invoice also, we need to follow the same treatment what we are following after 1/1/2021. So for that clarity only this circular is given. Okay. Then next. Time limit for filing ITC 4. ITC 4 is what? Goods sent on job work and received from job work. Whenever some goods are sent on job work or received from job work, so the person who is sending the goods on job work, the registered person, so it should be brought back within 1 year. It can be extended for a further period of 1 year. If it is capital goods, it should be brought back within 3 years. Plus it can be extended for a further period of 2 years. Like that one point is there now. So by that time they need to do this. Understood or not? And so if whether they brought the goods or not, etc. If it is not brought back, it is deemed as supplied. So for that they need to file a statement. That statement is ITC 04, form GST ITC 04. It was filed previously by 25th of the month following every quarter. Now they changed it to if the aggregate turnover during any preceding financial year or previous financial year. Preceding financial year, not any. So previous year does not exceed 5 crores half yearly. Exceeds 5 crores yearly. So it does not exceed 5 crores yearly. Does not exceed 5 crores yearly. Exceeds 5 crores half yearly. So half yearly by 25th of the month following the half year. 25th of the month following the year. Okay. So this is about input tax credit. Then we'll take a break and thereafter we will continue with exemptions related amendments in detail. So I know that I'm going little slow, but mainly because many students have attended December 21 attempt and May 21 attempt and all. So they requested me to explain in detail so that it will be useful for them. So that's why I am doing it. And in the first 1 hour, I did a quick recap of all the amendments. So if you want to complete that in a fast forward mode, you can see that. If you want to learn everything in detail, so you can continue this session. Okay. So it's up to you. So we'll take a break for some 5 minutes and then we will continue here. Okay, welcome back. So this, friends, the next part, that is exemptions and charge onwards. So we can have it in another session. So I'm feeling little, hand is paining. That's why. So we can have it in the next session, and I will give it as a continuity to this video if you are watching it later. Okay. So therefore, don't worry. I will definitely take. Already the amendment material is provided. You can also go through that at your end. And from here onwards, that is from exemptions and charge onwards, so till the FTP portion, the remaining some 20-page information is there. Okay, 20-25 page information is there, so that we can see in the next video. Thank you all. Thank you for understanding. Thank you for your support. Take care.